The persistent demand for tech stocks, especially in chips and other tech sectors, is driving the broader market higher and has left no sector behind. So Coherent is one of those stocks in the chip space. After Nvidia, Micron, and TSMC, it is the fourth in terms of gains so far this year, 2024, I want to believe. So the stock is easily strongly bullish. You can see that here. Its 200 moving average is upward sloping, and the MACD histogram is above zero and rising. The unbalanced volume indicator it has a slope, has a positive slope, and it's indicating that, or rather, the slope of its unbalanced volume indicator is bullish, indicating that buyers are really have been paying higher prices for the stock, and we have among other things what we have seen here. Okay, let's see. We have this analysis from London Stock Exchange Group. If you didn't know about Coherent, the company is a vertical integrated manufacturing company. It develops, manufactures, and markets engineered materials up to electronic components and devices, optical and laser subsystems and systems for use in industrial communications, electronics, and instrumentation markets. Its segments include networking materials and laser, and it is in its materials segment. Oh yes, you have the material segment manufacturers transceivers for data centers and electronic and sort of telecom optical networks, pump lasers and optical amplifiers. And then look at what we have from this journalist who used to be, I think he used to work with Bloomberg or something.
AI in the data center where they're having great success. And the product that they are maybe the best at is the one number that tells us a whole lot. 800 is the number because 800G optical transceivers are doing well for Coherent in AI sales. And that may be the most important product in the market for this company. All right, thanks for listening to Drill Down Earnings.
Aligning themselves with what's going on right now with AI, and they're right in that space. Hence, probably why we have them doing well so far. Why they have done well so far this year, 2024, and we have its analysis, its comparison with its peers. We can see. Let's see here. We have down here peer analysis. Okay, so it's not the best in terms of return since the last 1 year. FN has done better. What is FN? We can find out what FN is, which company FN is. We can find out. Let's see what FN is. FN is Fabrinet. Fabrinet has done better in terms of returns this year, and there's also another one, another stock, APH. APH, I want to believe has done better. Okay, let's get APH. Let's find out the name of that. APH. APH is okay, Amphenol Corp. Okay, I'm wondering. Sounds a bit more like a chemical company. Okay, those they have a better return so far this year in terms of margins. It's not hard. It's negatives. Sorry, its margin is negative, and APH is the best in that whole peer group. So even in terms of returns as well, AAOI is actually the best in terms of returns. Let's see, AAOI is applied up to electron. Okay, yeah. So yeah, let's return and see what we have for Coherent. So this is its daily chart. So as things stand right now, it's trading at $73.36. A slight retracement in this in the post-market session of what was left of yesterday, the 19th of June. And there are downward projections. We have 70.37. We have 66.49. We have 64.11. So before we continue with that, we have seen it has of late. The 20-day moving average has always been a primary demand line. We saw that this is when was this? This was it began I'm assuming it goes all the way back to, I would say, all the way back to early this year, 16th of January. It can even go all the way back to November of last year. It has always been that moving average, 20-day moving average, has been a primary supply line, but it became more emphasized in April, and then yet again in May, 10th of May, and yet again the 31st of May as well. So then all throughout May, it definitely served that purpose really well. And but since it had a spike as of early June, early June, and it hasn't come close to that 20-day moving average. But there's a good chance it may still be a primary supply, a primary demand line. But it's trading at a significant premium to that moving average. So sorry, I digressed. I just wanted to point that out to you, just in case you see the stock cooling off. That 20-day moving average will serve as a buy the deep opportunity, which is buy the deep signal. Okay, so there are no upper projections on this daily chart for Coher. We have to come all the way down to its weekly chart. We might find one here. We might find some here. Yeah, so we have some. We have 79.78, and then we have 88.26. If you want to determine the probability that it will get to such levels, there's a good chance you're going to find an impressive probability, an encouraging probability, because you probably, if you want to determine that, amongst one of the many methods you might use is to infer or refer back to its past moving averages. Past moving averages. Okay, let's assume we're using a 10-day moving average. We have 77.92. Okay, we have we can actually write it down. I'm going to write it down. 77.92, and standard deviation of 7.62, and then we have 78.58, 78.58, and then standard deviation of 8.16, and then here again we have this is going all the way back to we're going all the way a couple of years back, because this is the weekly chart. So I'm not exactly sure whether this will be very helpful, but it's still data anyway. 79.78, and standard deviation of 5.92, and then going all the way back. This is now January of 2021. 79.59, 79.78. Sorry, standard deviation of sorry, I got that one wrong. I need to get this right. This is standard deviation of 85. This is 85. 85.49. 85.49. Standard deviation is 5.38, and then this is let's get a moving average. 66.29, 66.29, and standard deviation of 9.48. There's a good chance we will obtain a moving average that is going to make this, the probability of it getting to 79.78 quite impressive. So this is where I obtain the moving averages. Okay, so this is the 10-day moving average. This is the 20, 40. As you can see it here, this is 10, 20, 10, 21, 40, 100, and so on. That's where they are obtained. So as I slide sideways to reflect on the previous on the past data, and then we just pick up the respective 10-day moving averages. Indeed, you can equally do it against any other moving average. And then down here, this is where we obtain the standard deviations, and then with them we can maybe try and quickly obtain standard is a probability that it will rebound to it will spike to $78 or thereabouts. Okay, so we can just quickly add up 77.92 plus 78.58 plus 85.49 plus 66.29. We have 308.28, and we have how many of them? We have 4 of them. We divide by 4. We have an average of 77.07. Really sorry about that. There was some background, but some noisy. There was a noisy. I had a noisy background, so I didn't want you to be dealing with that. So yes, we have the projection we are looking at is 79.78. So we have 79.78. There's a good chance it's 79.78. Okay, let's see. 79.78, and then we have average of we have an average of 77.07, and then we calculate the standard deviations. Standard deviations, we have 7.62 plus 8.16 plus 5.38 plus 9.48 divided by 4. We have 7.66, and then let's see. Okay, so the probability that it will surpass 79.78 is 36.175. I think that's it holds that 6% holds a huge amount of possibility in it, a huge one. So the probability that it will not get there is 63.825. But even at that, this is still a very healthy probability. Yeah. So Coherent. Not exactly the most fantastic, but it's up there, close by with the likes of Micron, TSMC in terms of gains, but obviously not anywhere close to Nvidia. Okay, so see what you make of Coherent stock, and thank you very much for watching this video.